Hey, I just wanted to jump on to talk about the WWE and this asset within the media industry, talking about as it gets increasingly more clear that they're looking to sell the company, um, doing a bit of a review of their business currently, and then also looking at who the potential suitors may be for this asset. Will it be Comcast, Disney, one of those large media companies, a smaller media company like like Endeavor or Liberty Media, or is it going to be maybe a big tech company like Apple or Amazon as they look to bolster their media presence as well? So we're going to get into this. For the last few years, it's been kind of speculated that WWE will essentially sell itself as Vince McMahon, who's kind of the controlling shareholder, gets older in age and he's just very hands-on the operation today. I think there's been some drama over the last year of him needing to step away from the business because of some allegations and issues that he's had. But what's really reaccelerated the conviction of a sale underway is that he's actually rejoining the board, not in a business operation sense, but just so as they have acquisition conversation and takeover conversations, all of the parties involved know that the controlling shareholder is aligned with the direction that the company's going and the sale process. So they thought it was important to bring him back. It looks like this deal, if it happens, which it looks like very likely it will happen in the first 3 to 6 months of 2023, right before they sign new media TV deals for another handful of years. And this just makes sense because if it's companies like Disney and Comcast involved and streaming players involved as well, they'll probably want to control like exclusive rights for the intellectual property. So it's at its highest value when they're free to do what they want with the asset and it's not tied into agreement with other companies for a number of years. They'll probably maybe look around for what they can get for these rights to help dictate what the value of the company is, because media and the TV rights and streaming rights is their biggest profit center. But ultimately, if a deal is going to happen, it'll likely happen in the first half of 2023. Just to look into their business a little bit on the statement side of their results. So they do a lot of revenue on live events like you'd imagine, but it's actually not really a profit driver for them to a great extent. They make about $10 million in operating income from their live events division. If you think about the amount of live events they're doing Monday Night Raw every Monday, SmackDown every Friday, I believe. And then, their special events like WrestleMania and stuff that they also have live events for. You'd think that this is like a core part of their business, but it's really not. It's obviously very important for the fan engagement and for the presence and stuff like that, but it's just a means to be able to film the media, to sell TV distribution rights and streaming rights, as well as for people to buy their all-access WWE subscription service and stuff like that. So not a ton of money is actually being made in the buildings during these events. It's all where the content's going afterwards, which is really interesting for someone who isn't a huge WWE fan or anything like that, doesn't really follow the company, but just sees their presence in the market and assumes that they do a lot more profit and a lot more importance on live events. It's only about $10 million in operating income. Where they really strive and deliver a lot of their income and growth from is the media side. So this is everything from their TV deals with big media companies who broadcast them on TV to streaming exclusivity deals. I think they do some stuff with Disney. They do some stuff with Peacock as well, which is owned by Comcast. And they get paid pretty handsomely for the rights to their IP, given the nature of the product. And then they also have like YouTube and other things that they talk about as channels that they make money off of their content after the fact on. And then lastly, consumer products is about 20 million. in operating income. So kind of funny, consumer products, them selling t-shirts, other merchandise is more than double on profit versus live events in totality. So I'm sure live events is probably significantly more revenue, just extremely low margin dollars, whereas consumer products is probably the opposite. So interesting to just get a sense of the business. Going over the last number of quarters, they seem to make net about $50 million a quarter average in net income. So they're making about $200 million a year, give or take. We see that here as well, just on a past 12-month run rate. The last number of years, they've been stabilizing the business pretty nicely, but anywhere between 150 to $200 million. In the last few quarters, their trailing 12 has been more like $220 million. So let's call it about $200 million a year they make in net income on this business, which isn't bad. Obviously, they're sustainably profitable. They don't vary too much, which is really nice to see. So before getting into their business a bit more, I just want to take a look at the stock, and it's really interesting given the markets and other media companies over the last couple years have been going down a lot as they got bid up during the pandemic and stuff like that. But WWE's really been getting a lot of excitement over a potential sale and what bidding war and valuation the company can get. So when we look past 1 year, the company's actually up 70% to about a $6.3 billion valuation. And remember, they make about $200 million a year. So that's about a PE in the 30s, low 30s for a media company. And we'll get into why, they may or may not be worth that much. But yeah, a lot of excitement here, a very unique asset. In the last day alone, it went up 17% behind the news that McMahon was joining the board again, which kind of solidifies the narrative that they'll be looking to make a big deal here in the next 6 months. But the stock's really been going up. Longer term, it's also been going up. We have about 160% rise in the last 5 years. This was also driven by them. Their All Access Pass, I forget what it's called for WWE, but they were gaining a lot of traction on that as a different revenue stream. Instead of people just doing a pay-per-view for one event, they kind of got them 12 months a year. So I think that was fueling some growth before the recent the recent run behind the potential acquisition of the company. So worth noting, already very expensive stock on a PE given the type of business it is. But investors obviously believe there's more upside and they'll end up getting bought for more than $6.3 billion, or they wouldn't be valuing it there. So maybe like $7.5–8 billion is like a target exit price, but it really comes down to what companies are willing to pay for this business during these times. This business, we just talked about the fact that they really rely on they really rely on the media side of the business versus the in-arena side of it. So just going over all of the different sides of their business, I learned a lot just by opening some investor relations reports. So they do a lot of work on obviously their weekly programming, so SmackDown, Monday Night Raw. They also create a lot of documentaries about their superstars, and they spin off reality TV shows, mostly with their female superstars. They have one called Divas and stuff like that. So not only are they live entertainment, they also put out documentaries, reality TV shows, which they're making money on. On the direct-to-consumer side, they do pay-per-views, obviously. So if you want to buy one of their special events, like Money in the Bank, or excuse my lack of correct terminology. I don't really watch the WWE, but they have these special flagship events that they put on that people can buy access to on TV, documentary lifestyle. So they do sell directly to consumers, and then they do short form content on YouTube and stuff like that, that we can kind of go into here. I should have been talking to these slides. So yeah, reality, Total Diva, Total Bellas, documentary. They do 30 for 30s, and then in ring weekly programming is kind of what they're mostly known for. Tons of scale in over 800 million homes. On the ad-supported digital side, yeah, YouTube, they're the number one YouTube channel in all of, they call it professional sports. You can agree or disagree with that. But they have a really big social media presence on their business, and I think they make a lot of money from YouTube by looking at their like digital ad income and stuff like that. And then pay-per-view. So yeah, SummerSlam, WrestleMania, different documentaries and stuff like that they're producing. So really unique business. They make money in a lot of different types of ways. What I found really interesting is they highlight in lots of their investor reports. I was trying to find one that was more recent. So this one was year-end 21. But as I go back like 16, 17, 18, they talk about the productivity and the popularity of their content. So they often say, NFL aside, they get the most views per event versus any other professional sports league. So more viewers on average than an MLB game, an NBA game, an NHL game, even the UFC, only behind the NFL. So this has like a huge audience and tons of people are tuning in. Their consumers are extremely engaged, very high value customers in the sense that lots of the times it's the whole family watching. It's something that parents do with their kids. They, watch every week on TV, then go watch them live when they come to their city. They're buying merchandise. They're very involved. So the fans, like the super fans of the WWE, are very high value customers, and it's unlike lots of other sporting assets that are out there. This is a truly unique asset. It's the longest running show and performance on live television or on television. They've been running, I think, like every Monday night since, the 1980s or something. So definitely a unique asset. The people who like the WWE will follow it anywhere, essentially. So that makes it very valuable to a Disney, to a Comcast, as they can either use this to accelerate streaming by putting, maybe one of the nights exclusively on streaming and get people to subscribe to those services, or maybe this can help make their cable bundles more sticky if that's where they want to focus on, slowing the bleeding of the secular decline. It's a lot of different ways to play it if a company was to acquire these assets. Another just visual here that shows the breadth of this business and all the different things that they're into. So obviously they have a huge library of content from over the decades. They do original series, which we talked about, special events, and then weekly in-ring. So this is a huge business. I think they're about 75% of their revenues coming from local market, so US, 25% international. They're trying to grow international. It's a focus for them. So a lot of opportunities of growth behind just direct-to-consumer subscriptions, building out international a bit more, and then all the other levers around, merchandising, documentaries, spin-off series, stuff like that. The asset itself is remarkably powerful in terms of how much the people who like watching and that are fans of the show just love the asset. And that just comes through over and over again in terms of the engagement and the amount of hours watched a week for people who are fans of the show or are fans of the sport, I guess you can call it. So really interesting. I can't talk to it too much more since I don't know a ton about the company other than what I've kind of uncovered on surface value. But the value of the IP it comes across very clearly in lots of the numbers that I've seen by digging in a bit deeper. I won't go through it all now because the main objective I wanted to pivot towards was who may be interested in buying this asset. So this article on CNBC kind of goes through some of the potential owners. Another thing they call out that I didn't mention is I think they do license like WWE assets for theme parks in some areas of the world. So that's another thing. Other than just the media side, these superstars and the WWE brand can be used in so many different parallels and things across the entertainment industry. It's really an entertainment brand and sub brands with the superstars. So I probably rambled on a bit too much about the background for someone who doesn't know the company that well. But I just wanted to pivot to talking about who the potential purchasers can be. One of them is Comcast, and I think Comcast is an interesting one just because, as we talked about on the channel a couple of videos ago, they have the potential to having to be in a position where they have a cash windfall of anywhere from like 10 to 12 billion dollars from Disney potentially buying out their stake in Hulu. And the end value of WWE, who knows? But it looks like it may be something like $8 billion as a buyout. So it fits nicely into money coming into their pocket, and then they can replace their loss of Hulu by adding in this media asset with the WWE in its place. So that's why Comcast is kind of one of the companies that people think is a front runner. They also have a deal with Peacock right now for streaming rights to some extent. So they can maybe, if they are seeing good performance and that get a lot of engagement, maybe they double down on that by not only owning all the streaming rights, but also putting it into their cable bundles, which they have a pretty big cable presence currently. So I think Comcast can make a lot of sense. The second one, Fox. I think Fox obviously sold all their entertainment assets for $71 billion, which is a crazy price in hindsight now, to Disney right before the pandemic. They do some TV deals for Friday Night SmackDown, but the company is so small and they're still primarily a news company. They just got out of the entertainment space because it was so expensive to compete and they thought it was too highly valued. So I can't see them really paying like 40 times earnings or something for WWE and go back into the entertainment space a couple years after they just did a huge sell-off of their entertainment assets. Disney's an interesting one. Bob Iger has made a lot of acquisitions over his tenure as CEO, and now that he's back, it'll be interesting to see if that continues. But similar to, why I'm not sure how the Hulu saga is going to play out, Disney's not in a great position to be allocating more capital to acquisitions. They don't have it on their balance sheet. They'd have to go further into debt where they're already past where they want to be on a debt perspective currently from that $71 billion deal they haven't paid down yet. And they don't want to dilute shareholders by releasing new shares, given the fact that their stock's trading close to like a 6-year low. So they're just not in a great position to do acquisitions, and they have a lot of work to do on their current business. I think in an ideal world, this could be something that would be good for Disney. Very strong IP. They can do like movie spin-offs and theme park spin-offs, and they already have a huge consumer products division. So I think it does fit in really well to Disney's business, like from a million miles away. But I just think they have bigger priorities and other things to figure out in terms of capital allocation before they're positioned well for a deal like this. So, that just comes with the cons of executing like a $70 billion acquisition with a lot of debt. It's like it kind of puts you in a bad spot for future acquisitions until you're able to de-lever, and they haven't got into that spot yet. So this may be tricky for them. Warner Brothers Discovery, I don't really have a good read on how David Zaslav's planning on running this company yet because it's so new, but it's been such a painful merger that I can't imagine them acquiring another company and making this even more complicated, especially with all the debt that they have. I can't imagine them allocating this kind of money, given their market cap right now, to a company and buy it for a premium valuation when they don't even have their streaming service fleshed out yet until later in 2023. So I don't think it's going to go to Warner Brothers. Netflix has been very choiceful in their acquisition strategy, and they've actually never bought anything material. They've bought in content for tens to hundreds of millions of dollars, depending on what type of content company they're buying. But they've never, I don't believe, spent like $1 billion plus on an acquisition. Um, it's an interesting one, but I just don't get the sense from listening to lots of Netflix's earnings calls and reports that they're interested in something of this scale in terms of an acquisition. This also has a lot of TV value and linear value in terms of the value in the company that's strictly behind um, their TV right package for cable for Friday night and Monday night. And I don't think Netflix wants any exposure to TV. They've said a couple times in earnings calls that they think linear TV will be dead in 5 years. I think they've been saying that for 5 years probably. But with that, like they just obviously do not have any conviction or do not want to have any piece of that business for the TV side. So it would be, I'd be surprised if Netflix went in. Now, Amazon, and I guess I'd bucket like Amazon, Apple together. It is an interesting one. Um, I think like they obviously have the money to do something like this, and they've kind of shown the appetite to, let's call it, overpay for assets before with buying MGM for billions more than anyone else was willing to. But I feel like they're going about sports a different way. They're buying rights conventionally from the leagues, spending $1 billion on Thursday night football, agreeing to stream Major League Baseball, and some paying for some rights for some Premier League soccer games, stuff like that. So I don't think that this is going to go to a big tech company. I'd be surprised, but once again, I think it's probably still in the cards if it's something that they wanted to do. Endeavor Holdings is an interesting one. These guys own the UFC, they own professional bull riding, also own some professional tennis tours as well. They're also an agency for talent. So they have a lot of things. I think they also just acquired a back-end betting software company. So they're all over the media and entertainment space. Their biggest asset is the UFC. Their company's, I think, 10 to $12 billion market cap, and they've had a rough year behind just like all of media going down. They're not overly profitable. They're essentially break even, some free cash flow, but I think that free cash flow positions really hurt their valuation as multiples have really come down over the last year. I can see Endeavor potentially buying this company. They are deal makers. They make a lot of deals. They buy and sell a lot. And I think they kind of know the space of having very colorful personalities in the company. Their CEO is pretty outspoken. They also have Dana White as part of the company as the guy who's running the UFC. So I could see how like a WWE could fit into this entertainment company, but it would almost double the size of the company. So would have to take out a lot of debt or just more of a merger than an acquisition. And then Liberty Media. Liberty Media is interesting just because they've kind of done this before. They own F1. They've bought the Atlanta Braves, stuff like that. So I think it's a possibility. I just think the value of the company, of like the companies run up so much on the public markets, and Liberty Media tends to like IPO their media assets. And I just don't see how they're gonna, if they don't have, something that they're gonna roll the WWE into, like Disney or Comcast would in their broader packages and streaming services, like what value add they're gonna do in the short term to IPO it at a higher valuation than the buyout price. So could be interesting, maybe, but I just don't really see how this would come to life. So I guess my overall thoughts are Comcast probably makes the most logical sense as an acquirer, especially if they get their stake of Hulu bought out pretty soon. The backup kind of dark horses, in my opinion, would probably be Endeavor or a big tech company coming in with a splash, trying to really bolster their presence in media. But I think just it goes, or as the asset itself is concerned, going back, trading over $6 billion. If this does go to $7 to $8 billion, people are paying close to 40 times cash flow and income for this asset in an environment that lots of these tech companies, sorry, not tech companies, lots of these media companies like Comcast are trading for 10, 11, 12 times earnings. So it's going to be highly dilutive if they were to, issuing more shares to make this deal. And that's why it's just a tough one. Like, I'm surprised it's getting bid up to this extent for an acquisition because it's already pretty pricey on current value. So I'm not sure how much above this price it's going to go and it's going to be justified. And that's why I think it's a potential dark horse for like a big tech company to come in, write a big check and scoop this up, given that this valuation like doesn't really make sense for a traditional media company unless they think they can drive a lot of cost synergies and stuff like that. So that's my opinion. It'll probably go not much higher than this, maybe $7 to $8 billion on a buyout. And I think like Comcast makes the most logical sense, but potentially Endeavor comes in, makes a splash. Potentially a big tech company comes in and throws down a lot of money because this is really a unique asset. And as media's kind of folding together under less and less roofs, it's harder to become a standalone media company today with streaming and everything else that's going on. There's not many tier A level assets like the WWE out there. You can't just go out and buy the NFL or buy the MLB necessarily. So these assets are far and few between. So I understand the desire and why this could get bid up if multiple companies want an entertainment asset like this. And that's probably why you're seeing the price that you're seeing. So this will be really interesting to see how it pans out. But with that being said, let me know your thoughts. Do you think that there's another company that may come in and make a bid for WWE? Do you think Comcast and the companies that I just talked about are the most likely suitors? And what do you think about the current valuation? I think this is too high, obviously, for my liking to kind of go in and hope for an acquisition to take me out in the next 6 months, because I don't think it's going to go, much more than 10, 20% higher. And if they don't make a deal, I think there's probably a lot of downside to get back to a multiple, that's closer to 20 to 25. So I'm not going to be touching this one, but I'm going to be eagerly watching from the sidelines to see what takes place. If you like this type of content, please consider subscribing to the channel. It would mean a lot to me. And in addition to that, if you own the WWE or just know more about the business, are a fan of the company or the product they put out, would love to hear from you in the comments and would love to have you drop a like on the video as well. But thank you guys for joining me for this one, and I'll see you all again soon.